Please, I'm not hearing you. It's hope nobody's talking. I mean, I just joined.
Hi.
Off your mic, this guy.
How about now?
Yes, yes, I heard that.
Clearly now. Clearly, you can hear me clearly.
Yes, clearly louder.
Yeah,
No,
loud
no
and clear.
extra noise. No extra noise.
No,
No.
no.
Okay, good. Okay. I don't know why such things happen, but it's happening. So I want to see if I can share my screen and it won't stress anyone out. Okay, so let's begin. Let's get to begin. Okay, so you guys can still hear me, right? You guys can still hear me
Yes,
now. Okay, good. So I
yes.
already started speaking the other time. So now let's get to it. So now we are talking about mastering time zones, and I've been speaking about this for a very long time. Though, and I said I was going to host a webinar on this. It came to my attention that a lot of us don't understand the idea behind time zones. And for those of us who already know, who have been in the forex space for a very long time, would understand the time zone idea, trading within a time zone idea, and the pairs that you need to trade within the time zone and what it means, especially when you see, okay, this is a particular time zone, and what simply happens during that kind of time zone. Or during that kind of session. So that is all the things we're going to be breaking down tonight. And for those of us who are new to it, I want you guys to listen carefully and also jot down your questions if possible. I want it to be like a 30 minutes long discussion, not so much, not so long anyway. Just to be for like question and answers. So I want it to be short, not too long, so we don't get bored. So without further waste of time, mastering time zone. Now, why do we have to master time zones, and what are time zones, and why do we have to master time zones? Now, that is the first. What's wrong with this thing? Okay, hold on. I have an error from here also. Okay. Okay. I'm having this strange behavior from my laptop. It doesn't do this. This is not nice. I can't even move my slides anymore. Okay, so this is what I'm going to do. I'm going to have to improvise. So the why. So now, global market sessions, also known as time zones, is
What do you mean? I hope this is recorded.
Yes, it is recorded. It is recorded. So global market time zone, global market sessions is where financial institutions such as banks, hedge funds are active. The market runs for 24 hours because of what they call it time zones, and because of the liquidity and the volatility shifts by regions. So how does this happen? It happens because it happens in a way that, okay, so for example, I think I mentioned a little bit about it earlier during the live session. I think by 12-ish, there about maybe 12 or the second one, the one after. That is what I was trying to explain the other time. I said that the when it's just like you waking up in the morning and you know the regular banks say open by, let's say in Nigeria, open by 8. So it's the same thing with everybody. Said everybody's work time is 8 o'clock in the morning. So when everybody's work time is 8 o'clock in the morning, everybody with other countries too, same thing, work time 8 o'clock. They open their banks, everybody goes to work, starts doing different kind of transactions. That is what begins the day. That is what begins trading, what they call it, trading time. That is what begins trading time. So when you see, let's say a bank open at in the UK, then you see, that is 8 o'clock. That is when you will start to see the markets will open and markets will start moving. When you see a bank open in Australia, their own 8 o'clock is probably our own 10 p.m. here. Then that is when you see that the markets will also open because they've already started performing transactions. That is how it is. So when they start to perform transactions, that means they're pumping money into the market or they are taking money out of the market. So that is when you start to see markets will move. This is when you start to see volatility. That is what the definition of global market session means. So market do not move all day. That's obvious because it's not every time transactions are performed. Different sessions mean different liquidity levels. So if you look at one session today, the money they move on that session is not the same as when they move on another session. So they were as long as they don't move different kind of amounts, different kind of session, the volatility behavior will be different. And those that have the biggest currencies and those that have the currencies that people perform most transactions on would be the ones that do the biggest moves. So, for example, when you want to see something trend a lot, you would have to see USD inside. You will see USD inside for sure, because you will know that this one is USD, and every single USD is the base currency of the world. So there's no transaction you want to perform without USD. So that is why you always see USD trend. Every USD pair, at least some USD pairs would always trend, or anything concerning USD would always trend, because it is what most people use to perform transactions. Even when you see cross pairs like Euro GBP, they will first of all change the Euro to USD before it goes to GBP. So every single currency, every single pair has USD inside. So if it wants to trend, you have to see, because it's the most traded currency in the world. It is the world's base currency. So trading is not just what you trade, right? It's not just what you trade. It is when you trade. It is also when you trade. So I used to say this also. A lot of people used to ask me that what time is the best time to trade? And I will answer this question along the way also. So that is for my first introduction. Now, my second thing I want to say, I want to go into is the types of sessions. Types of sessions. That's what I want to say next. I think my computer is the problem. Yeah, it is. It is mostly the problem. I think I need to just reload it. If I had known, I would have gone from. I would have restarted it before I started the live session. Supposed to move, but it's not answering me. So the next thing is what? The global sessions. Now, these global sessions are the 4 sessions that we have in trading. Now, they are 4. Now, they are the Sydney, they are the Tokyo, they are the London, and they are the New York. I forgot to put the time. I'm supposed to put the time. Okay, so I'm going to put the time. It's just make sure you guys are writing it down or you guys are noting it down. So we have 4 of them. The first one is the Sydney. Sydney is the financial hub of Australia. It is not the capital, but it's the financial hub of Australia. Now, that is the first session that opens in the day. So right now, Sydney, since the time has not changed, we are still on daylight savings right now, in Europe or in England. So GMT +1 is would now be 11 p.m. and they will be 10 p.m. there. So now Sydney would open by 11 p.m. tonight. So in the next 2 hours. But that is for us trading OTC. That is for us trading OTC. But for those of us trading actual forex, Sydney opens by 11 p.m. on Sunday night. Those are for those trading forex. But we trading OTC, we always have all round market. It runs for 24/7. So Sydney market normally opens by 11 p.m. That is the first one that opens. 2 hours later, Tokyo would open. Now every single session runs for 8 hours. So now if this opens by 11, that means it's supposed to close by 7. Supposed to close by 7 or 6. Let's count 8 hours. If it opens by 10, it's supposed to close by 6. If it opens, so it's supposed to close by 7. Currently, supposed to close by 7 currently. Now, if the moment winter is over, the Sydney markets would open by 10. So I hope you guys are getting that very well. So the Sydney markets would open by 10 because since there's no winter for most of the year, so Sydney market naturally opens by 10 and closes by 6. But during winter, Sydney market opens by 11 p.m. and closes by 7. So now, what opens after? It is the Tokyo market. So funny enough, Tokyo is the capital of Japan. It's also the financial. It's also the um, um, parliamentary hub. It's also the government. What's the name? How should I? What should I call this? But it's just the capital city of Japan, right? So Tokyo also, what they call it, it opens 2 hours after the Sydney. So that means from 11 p.m. or 10 p.m. 2 hours after is when Tokyo opens. So now Tokyo also runs for 8 hours. So that means if the market is opening by 11, Tokyo will run till 9 a.m. in the morning. That is what it means. It will run 9 to 9 a.m. in the morning. So that means that if you have, okay, Mr. Emmanuel is typing something. If you after the moment you open Sydney, 2 hours later, that is by 1 a.m. If it is if it is not during winter, it is 12 a.m. So just 2 hours difference is what you have in between Tokyo and Sydney. So they are together. Now, the next thing we have is London. London opens by 8 when it is not winter, but during winter, London opens by 9. So you see there is no much what they call it. Now, when you see that Sydney and Tokyo, you see it's 2 hours difference, right? It's a 2 hour difference. They call that thing overlap. They call it overlap. And maybe did I use the right word? Maybe it is overlap. Well, I will remember if I'm not correct, but they call it overlap. That overlap period is where the market is the most volatile. You will see things, trades are moving, because now let's say you have AUD JPY. That means that if you want to do business, right? And there's a business between maybe two billionaires, one in Australia, one in Japan, and they want to do business. Then you see they will have to move money, will buy JPY, the other person will sell AUD. So there's a business going on. So that's period of overlap. They cannot do a business without the other bank not being open. So that is when you see that's when the overlap effect happens. So when the other, you will like, okay, this is almost at the end of this, or it's almost at the beginning of the day. Let's quickly run business. Then they quickly run business before the close of the day or before the beginning of the business time. So they just quickly run the business, and you will see that period is where you see those pairs that are concerned that period concerns them. You will see them move a lot. That is overlap. So I'm still explaining something. Now I was at London. Now London session is from 8. It is from 8 not during winter, and it is 9 p.m. during winter. Now New York session is from 3 during winter, and it's from 2 when it is not winter. So now, when you count, 8 hours from London session, from 8 to, if you add extra 8 hours, that's 4 o'clock. So that means that there is also a period of overlap between the London session and the New York session. Then also you will see a lot of movement in the market. So in there, you will see between the hours of 2 o'clock to 3 o'clock, a lot of moves. And when New York session opens, you will see news also drop, 2:30, 1:30. I know someone there that always just helps me check news during the days where I used to trade. Someone on this live session that always helps me check news every morning before I trade. So they do. So that happens too. There is a movement, always massive movement between that period of changeover. So now, what is peculiar to this to each global session? The first one is seen in the market opening. Of course, that's the period market will open. Initial liquidity, they pump in the money. The next thing is Tokyo strategic positioning, range-based movements. A lot of times, the moment Tokyo session opens like this, the market will have maybe either, if it is not trending, if there's no news or it is not trending, you will see it consolidate. It will just be going up, but it will be slow. The next thing we have is London session. Now, during London session, people from every part of the world are readying their money now. We want to trade today. We want to do business today because most of the world is awake at London session. Most. So the only people that are not awake are the Americas. And the Tokyo, they will still be what they call it. They are just a little bit, I think it's 12 hours. So it's still night. They are still doing business. Okay, they can do business. They work like madmen. So they work a lot. Their work ethics is different from one. So they can work to the night. And that alone would mean that, okay, this London session, everybody's trying to put in money to set in for the New York session, which is the final one for the day. So now, London session is known as where money is being pumped in. Most people that have the money are always awake at this time, including us. Then high volatility, then breakouts. If market has been consolidating in the Tokyo session, it is the London session you will see the breakouts. Now, the New York session is now where it will get to the highest point, liquidity peak. There is nobody's pumping anything anymore. They're just waiting for reactions now. Then you will start to see reversal, then you start to see news affect the market and so on and so forth. Because USD is the most traded currency in forex market. So that is when you start to see news on USD. That is when people now start to calm down. They won't put money again. They will just calm down and wait to see the outcome of things. That is how the global sessions are. Now, session behavior is what I'm going to next. Okay. Session behavior is what I'm going to next. I've already talked about it briefly. I'll just browse through it. So session behavior, Asian session, when it comes to volatility, it is lower volatility. It is range-based movement, institutional positioning, and liquidity build-up, waiting for the London session. Under liquidity under volatility for London session, high volatility, strong breakouts, London open volatility. New York session, high volatility continuation. Like I said, it will continue because people are watching what is going to happen. If they are going to put more money, or they are going to, when people put more money, that is when you see the market trend till the later hours of the day. But if people don't put more money, you will just see it calm down. Either it is consolidating or it is reversing from where it had moved to. So you will see things like, yes, it does. Everything does. So time for question also comes in. You will see everything does. Now, possible reversals and US news release. Those are also part of the behavior of the New York session. The next thing we have here is the pairs that we'll be focused on the Asian session. Now, Asian session consists of both the Sydney and the Japanese. I'm just combining it together, right? The Asian session, Asia is Japan. Let's be honest, Asia is Japan, but I'm combining the Sydney and the Japanese session together, the Tokyo session together. I'm combining it together, so just to fit in because they have similar behaviors. So now the pairs you'll be focused on the most in the Asian session are JPY and AUD. They are the most active. Most of the time, they have a smooth movement unless they have a major news. If they have a major, that's when you can see a spike or you can see a very large candle, or maybe you can see spread. Aside that, you don't really have so much activity in Asian session. They are always smooth. That's why a lot of people say they enjoy trading at night. You understand, right? We used to do a lot of trading at night and it will look like everything is calm. It is only once a while you will see misbehavior from the market. That is one of the reasons why. Next, the London session, the most traded pairs in London session are the Euro and the GBP pairs because they are the ones that dominate. Euro is the whole European Union. GBP is one of the biggest economies in Europe. That's Great Britain pound, the biggest economies in Europe. Now, the next thing we have is the New York session. The focus on the New York session are mostly USD and gold. They are always very active during the New York session. So you will see them move very fast. That's why you always complain about USD card in the night. That is not its time. So that is for session behavior. Now, We are going to session pairs now. So this is where you identify all the pairs that you can trade at every particular time. You are confident of trading. If you look at it at that time, this is what I was talking about. This is one of the main highlights of this live session. So now, these are the pairs, right? I want you to look at it very well, guys. I want you to look at it very well. Now, Asian session, the pairs that you expect to, let's say, win on your first entry. Pairs that you expect to win on your first entry, especially when you're in the session, it is not like foolproof, right? It's not foolproof, but then a lot of times, if you go back in time and you notice, you will see this happen multiple times. The AI also does the same thing that we also do. It thinks the same way like we do. It does the same thing like we would do. But the difference is that it is an AI. It does it faster and it does it more reliable without mistakes. So now look at it. Asian session. The pairs that you expect to move, to have volatility, to have more liquidity and volatility under Asian sessions, these are the major ones. So you will see that my colleague wrote some things on the channel about 30 pairs that the AI gives signals on. About 30 instruments that the AI gives signals on. Now, on the Asian side, we have USD JPY, we have AUD USD, we have NZD USD, we have AUD JPY, and we have NZD JPY. I'm sure you have seen all these pairs before on the AI. You've seen the signals before, you've taken it before. These ones are the cross pairs where there's no USD involved. These two, AUD JPY and NZD JPY. Now, JPY, that is the time, Asian session, that is the time 12 to 8 or 1 to 9. That is the time. Now, AUD, its time is between the hours of 11 to 7 or 10 to 6. So you can see that is the time. Also, you can trade them between that period. Now, NZD USD, same thing. NZD New Zealand dollar is the same thing. 11 to 7 or 10 to 6, depending on the season of the year, whether it is winter or it is the other seasons. Now, the crosses AUD JPY, when you say AUD JPY, when you say AUD JPY in the afternoon, you should expect that it will be slow. And when it is not trending, you should expect that it will stress you. You should expect that it will stress you. Do you get? Why is this guy messaging me? I'm on a live session and he's calling back to back. Okay, so you should expect that this kind of pairs will stress you, especially when it is not during their time and they are not trending. You should know that this one will stress you. This kind of trade will stress you. Now, the next thing is what? London session. These are the pairs that are under London session. These are the currencies, right? I've not talked about the crypto. I've not talked about the commodity yet. They are the next slide. So now, the London session has euro. You will see euro, you will see GBP, you will see CHF. I talked about it. If you had heard me, I talked about it. The next thing you have is what? Is the crosses, right? The crosses here are the ones that are against each other, that does not have USD inside. And that's when you hear crosses, you know that they are the ones that have what they call it, that the ones that don't have USD in them. So you will see things like Euro GBP, Euro AUD. You will see, I don't think Euro AUD is here. Euro JPY, GBP AUD, GBP JPY. You see stuff like that, but they are not listed here because of the page. I'm just trying to manage page. I'm just trying to manage the slide. But then those are the pairs you will see. So those ones also have what's the name in them? Have the London session. As long as you have a pair between London session and Asian session, both Asian session and London session, you can manage what they call it. You can trade those ones too. These ones I just said. Now let's say you have GBP AUD, because I know we see GBP AUD a lot. If you see GBP AUD, you can trade during Asian session and also trade during London session. Do you understand? If you see Euro AUD, you can trade it between London session, you can also trade it between Asian session. They should move during that period because that is their time. Do you understand? So the New York session, the major ones are what? USD, CAD. You know that this one is an afternoon pair. Euro USD also. It has what? Euro on the London, and it has USD on the what? New York. So you should know that this is an afternoon pair. This is a 2 p.m. to 4 p.m. kind of pair when there is a cross over. Because London session is running, and so that you know that time is its time. So the major moves are always around that period. The next thing you see is GBP USD. It is a what? London session stroke New York session pair. So you can trade it on both sides. You see they appear both sides. They appear at the same side. Now, the next thing you can also see are also the crosses. Now, the crosses like CAD. So like CAD, what they call it, CAD JPY. You can trade it during this period too, because it has JPY inside, and you can trade it here because it also has an element of New York session inside. You can trade GBP also. GBP CAD, you see, it has an element of New York session, London session here, and also has an element of what? New York session here. So that is for the session pairs. Now I'm going to commodities now and crypto. I hate the way this thing is stressing me. I'll have to escape here and present again. Okay, so these are commodities and crypto. So now, during the Asian session, the only commodity that you know that runs through every single session is gold. Gold will give you anything, anytime. It doesn't matter. It will give you anything, anytime. Even though sometimes you may not get, like I said, it's all this, everything we study and everything we learn, it is not foolproof. You still have to manage your risk, which I'm going to get to in a second. Right now, the commodities are what? On the commodities are gold and silver. We know silver very well. In fact, there's no time we traded silver that we've won it on the first entry. I don't think anyone remembers when they win silver on the first entry. I don't think I remember when I did that too. Now, during the Asian session, gold moves. It doesn't matter. As long as there is news, it moves. As long as it is just there, it moves. Now, silver is always slow. It's always slow. And when it does move, it's not as fast. Let's just say it's not as fast, because one of the reasons why gold moves is that there was a particular time, I think maybe you would have heard this explanation in the last webinar. Gold was the base currency of the world before 1946. For everyone who want to perform forex or international exchange, everything is pegged against gold. One carat, whatever carats that they used to measure. So it was gold. If you bring your currency, you are going to be selling it. If you want to buy something, you have to convert your currency into gold, then use it to buy from another country. That is how it was until 1946, when the Bretton Woods Agreement came in. Then it became dollar. So for that period, gold still even though gold has been shifted away from the base currency, gold still remained in the shadows, in the sense that for every single time that the world is about to enter into chaos, the only safe haven you have is keeping your money in gold. So that is why when you see that there is a rumor of war going on, or there's actual war going on, gold will spike. Gold will start to spike, start to go up. Now, gold has broken a $5,000 level for the very first time ever. It has never been up to 5,000. The highest it has gone to was 1,900. Now, it has gotten to 5,000. Reason is because there is always, whenever there are things that making the world unstable, like news or behavior of some certain people or some certain countries, it would spike gold. People will quickly rush into gold. So it doesn't matter what time you are trading gold, it always moves. It always moves. So gold, Asian session, doesn't matter. It can have moderate movements. It can even have big movements. Sometimes gold will have moved before you wake up. London session, momentum builds, goals become active as European equity enters the market, peak volatility, strong measuring US economic data movement, and so on. It moves at every particular time. It doesn't have a specific time. It doesn't have time a session type. It doesn't have it's not tied to a session. So silver, unlike silver, silver does it mostly at New York session. So if you see a signal of silver on the AI, you can, especially when it's in the afternoon, you can approach it. If you want, all these are applied to you personally, but I want you guys to know this so you can understand why. You can understand why. There's a reason why I want you guys to also be here to see this. You can understand why. So it's not just because you see things, it just happen and you just follow it. No, you understand why these things are happening. So now we go to crypto. Crypto most of the time is a 24-hour, what they call it. It doesn't have any uniform way of liquidity to it. The best time you will see it move is during the London and New York session. It doesn't move at any point in time. So during what they call it, during Asian session, because it is OTC, sometimes you can consider it. But for me, I will still trade out this if there's anything I see, especially on the live session. Personally, I do consider some things like this, but on the live session, I would trade it. Doesn't matter. So that one is because I want to like teach people how to use AI mostly. But sometimes I consider these things. And that is why you see me when I see a pair sometimes and I see it appear again. It depends on the pair that appears again. If it is during my session, I can take it. But if it's not during my session, I won't. So I consider a lot of things too. So when you see me say I don't want to take this pair again, it is based on the fact that either it is not during the session. AI is just using everything to take trades, to give you signal. But it is up to you also to okay. Sessions too also matters. I can decide to take it here, I can decide not to take it here. So that is for crypto. Now, cryptos are always silent during the weekend, except there's something drastic that happens. Always silent. You will always see it's always silent during weekends. It also moves during the week, but weekends, it's always silent, except something serious happens. And that is when, and it is easily manipulated. So let's go to the next thing. This is where we talk about the liquidity mapping. I wanted to do a Venn diagram, but I didn't have enough time to do it. So this is remove this, then break this. So okay, let me remove this. Okay, so this is liquidity mapping. So the thing this one contains all the pairs I was talking about. So in case you guys can come back to watch this and also put it down somewhere, maybe you can have this for yourself. I guess let me count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Okay, not this one. Sorry. Okay. So I want to see if I counted it to 30. So I did it into a multiple, what they call it, the pairs that moved during the Asian, the pairs that moved during London, the pairs that moved during New York alone, and the pairs that move at any point in time. So these are the pairs that move at any point in time. Like I said, gold is one that moves at any point in time. So when you see gold, don't discriminate. You get it moves at any point in time. It is when you approach it sometimes. Maybe you meet it at a time when it has already slowed down. Do you understand? And when it slows down, it's not trending again. That's a different thing entirely. But a lot of times, if you meet gold well, it gives you one time. It gives you one time. So if you want to, that's another different thing. That's good. If I'm going to dive into that, that will be another different webinar on its own. And if I start talking about it, we will pass 3 hours. So let's go to the next one. You can see the pairs Asian session. These are the cross that I did not mention on the other side the other time. I just did a summary. These are the crosses that I did not mention. Now these are the ones that overlap, like I said, Euro JPY, JPY that overlap during the Asian and the London session. These are the London session ones, Euro GBP, the crosses that are during the London session, you can see that I did not put on the other side. It says I talked about Euro AUD and GBP AUD. You can also trade them on the what London session, so on the Asian session too. These are the London session and the New York session overlap. This one are the ones that can trade in between both times. USD CHF also. USD CHF too, you can trade in the afternoon, you can trade in the morning. You can trade it at as long as, but you can't enjoy trading it at night. You will be out of bounds if you are trading it at night. If you sit and you're trading it at night, it is just the way it is. Now, if the AI gives it to you, you can, but you should expect that you don't win it on your first entry. Be ready to like back up, because it may not be moving except you meet it trending, which markets can trend at any time. You cannot predict when it will. You can just see it trending and you'll be like, okay, I will take it. So now the next thing we have is what? The what they call it, the New York session, the New York only. These are the major ones that you see. USD card, I think if you guys have gone back in time too, you will realize that we used to win USD card at, especially in the afternoon, a lot. One time, 12 o'clock session. One time you will see love. If we win one time, it has to be during the afternoon. Now these are the ones that are active across all sessions. You can see them: Euro USD, GBP USD, and USD. But like I said, anything USD as carries power all day. People are always trading in USD. So that is for this part. So now we are going to what they call it, to volatility dynamics now and AI edge. Okay, so here we are talking about what low and high volatility gives you, which I didn't do very well. I wish I could do it again. Let me redo this. I didn't do it very well. So I'm coming. I'll reload this page again. So volatility dynamics, you will see that on your IQ options. Let me load IQ options for you guys so you can see. See, do you see this? This also matters. This also matters when you are trading. So now, okay, I know you must have seen this before when my colleague was showing you this. So there are some pairs you can ignore because their volatility is low. So let's say I load USD now. If the volatility is low, look at this. What direction is it going? Do you get now? Let me go to another time frame so you can see what I'm talking about. It is not. Do you see it? What direction is it going? You don't know. Because what? Volatility is what? Is low. Now let's look for one that is high. Maybe I can be shamed. What direction is it going? It's up, because people are pushing it up. Let's look for one. So that I can be shamed too. Two airlines. Let's do airlines. I know we don't trade airlines, but at least it has trended. It has trended before, and now it is starting to pick another position, right? It has just been ranging for the meantime. Let's go again to another one that is full. All these ones are not on our AI. So what direction is this? It is going down. So you will see it by the large candles. You will also see it by the movement. That is how you will know if volatility is high or low. Now let's go to maybe the ones that we can trade. Euro AUD. Let's look for the ones that we used to trade. Let's look for the ones that we used to trade as. Okay, so let's say I think we trade Euro NZD. I think we do. Let's see what is happening here. What is this? As long as it has more than one bar, volatility is high. Volatility is at least okay. Then you can know that okay, this market is actually going one direction, it's trending. I hope you guys are writing this down, because a lot of these things I didn't put them in the I didn't drop them on the PowerPoint presentation, which I'm going to send into the group too after I'm done. So the next thing I have here is, so let me go back to what I was saying before. So now low volatility means consolidation. Like I said, it won't move, it won't go any direction. It will move slowly, it will not consolidate, it will give you fake out, it will just go to the top. Now maybe AI now gives you buy. AI can also give you buy when it feels like, okay, this pattern means it will break out and there is no volatility to break it out. That is when you realize that you will slow down. So what the AI does that now makes it better is the fact that it gives you recovery levels. So now, for example, now it is consolidated. Now AI thinks you were supposed to buy from it because all this pattern represents a breakout, right? Let's say it's supposed to buy from here. This pattern represents a breakout. This pattern represents a breakout and it's supposed to break out. Now, what happens? Because of low volatility, it rejects, then it comes back down. Now, when it comes back down, you know that it will still attempt to try and break this place again because the pattern already represents a breakout. So what does it do? AI gives another signal. AI gives another entry here. That is where you see the idea of recovery levels, martingale levels. Then to give another one, to give another one, to give another one to the last place here, so that when you go, it's kind of before it tests this place, you would have won your trade. Because it will still attempt it again. You would have won your trade before it gets there. So that is how it saves you in the sense that in the case that it doesn't go that direction immediately. Sometimes you see that it give you direction. It will slow down, you win on the last martingale level. But sometimes also when you don't get to win the last martingale level, it will still travel towards that direction. And sometimes it doesn't travel towards that direction, but you make sure that you win it before that particular place that is stopping you from not winning it, from not for the pair not to travel or move towards the direction that's predicted it to go. It's to make sure you either win it before it, or the trend will still travel even if you don't win it. One way or the other, it tries to think like a human being, figure things out for you by using every strategy that every single person or every single individual knows. Use the same thing to navigate the markets for you, giving you signals and navigating everything left, right, just to make sure that you win the signal. That's basically how it works. So when you see volatility level, you look at the bar, you know, okay, this. A lot of times I don't do all these things because I don't want to complicate the way the AI works or the way I use or the way I trade personally. I don't want to complicate it. I don't want everyone to like. But over time, as we are on this channel, when we get to learn more like this on webinars, I would be introducing all these things. So there's so many things to learn when it comes to using the AI. There's so many things to learn. As long as you understand how the AI works, your trading will be better. And your understanding will be better. You can navigate anything. So the next thing we are going to talk about is high volatility. You will see when there's high volatility, you see trends. I just showed you now. You see liquidity grabs. When I say sometimes too, liquidity grab, when there's high volatility too, I don't like it also because you will see us trying to win a trade and in the last second it will move, it just dive down and take us out in 1 second. And that 1 second, just for you to now come and win it on the next martingale level where it will now still dive back, move back up with that same speed or move back down with that same speed to win you the trade. But why did you let us lose the trade in the last second on the first entry? It is what high volatility causes. So what it just did sometimes is it just comes to grab liquidity. Let's say you have, I don't know if I can show you that because of our time, but let me move past that. Because I would love to show you that because of our time, but our time is fast spent. I slowed down initially before I jumped in, before I started moving at pace. So AI gives probability, obviously. That's what I said, like we all know before. Like we all know, AI will give you 90%, 90, 95%, 92%, 90%. We take it at 90% and we say we want a signal to be strong. So anytime you see a signal that is strong, it's probably because of this volatility that you're looking at. And when you see high volatility, you will probably see 3 full bar or something on that pair. So you only see these things are full, especially when it is their time. AUD said is almost its time. So you see this. Maybe our AUD USD would increase when it comes to when it is 11. And others, you see CHF, JPY, you see them increase. It will see their volatility will increase. But now, CAD is still on because it is still its time. I have not finished what they call it, New York session yet. So CAD is still on. CHF is not on. It's only CAD that is on. So all these things are like that. So maybe when you see don't let me lose the track of what I was trying to say. So probability 90% upward, we know that is what AI gives you. Now, time zone is timing. The idea of time zone is timing. So when you see you look, okay, this doesn't fit into my time zone. I can skip it if I want. I can take it, and if I take it, I know that I'm going to be setting martingale levels down to be able to recover for it, because I already explained a little bit on it. I gave a little bit a deep insight as to how the martingale level also works. It thinks purely like a human being. It thinks purely like a human being. So when it sees a reaction, it knows the next reaction. When it sees like a no, so it uses everything that it already knows to give you the next reaction. So it goes as low as going into lower time frames to check, okay, am I seeing volatility here? Am I seeing liquidity here? Am I seeing inducement here? Am I seeing a zone here that I can react to and use this to travel? So you realize that when it sets you entry here, it can now rescan again and go back to, so you see another different signal again that is telling you sell almost immediately after, because it has seen another reaction from the market. You can buy from this pair now. You can buy from this pair, and the same pair, maybe after you finish taking the initial one, it is giving you sell again in like 20 minutes or 10 minutes now. 10 minutes from that same time you took it. So that is how it is. So that's basically how it is. So AI gives probability, time zone gives you timing. So if you add the two together, it will increase your precision, and it will and at the same time follow through with your probability. So next thing we go to is we go to risk framework. Now, for those of us who are new here, this is where you need to pay attention to the most. I know a lot of us know this, so I'm going to also talk about it right here, right now. I have about 5 more minutes. I want to go through this very fast, and I want to make sure that you guys understand before you guys start asking me questions. Maybe I can even postpone the questions later and sort some other people that are looking for me right now. But I will try as much as possible to make sure we cover these questions. So in like 10, I want to be done by 10:07. So now what we are looking at here is our risk framework, where we also talk about on this live session every single now and then. Now, our risk framework is 10%. Our rule is what? 10%. That is the maximum you can risk per signal. 10%. The idea is AI gives you signal. You are not supposed to lose that signal. You are not supposed to lose the signal. That's how much we trust the AI. You are not supposed to lose that signal. 10% is our rule. So anytime we are setting 10% maximum for that signal. So martingale level 1, martingale level 2, martingale level 3, first entry, everything should be 10%. It should be inside 10%. Anything more, it's not following the rules. So you see fixed rule of 10, every single trade, exactly 10% of your no level, no emotional sizing, no consistency or over excitement. No, nothing like that. We just stick to what? 10%. The next thing is we also have a daily drawdown limit, which I do 10%. I don't do 10%. I do signal. But for those of us who have smaller balance, 10% is your daily drawdown. So the moment you lose a signal, or the moment you lose 10% of your account, stop trading for that day and come back later. Either you pick 12 hours or you pick 24 hours. It is up to you. But I pick 24 hours. My own 24 hours may not be total 24 hours. If I hit daily drawdown, let's say around 11 p.m. in the night, my day, the next day is when I come back. The next day is when I come back. So I've hit daily drawdown today. So it is until tomorrow before I can trade again. And I don't know how my schedule will look like, but I would. It's only tomorrow. Anything from 22nd of April, that's 22nd of February, that is when I will trade again. So that is my own daily drawdown limit. So your own daily drawdown limit, depending on your capital, you have to calculate your 10% Or if your capital is big, you can also use, if you're not using up to 10%, you can also use one full signal, which is the entry, martingale level 1, martingale level 2, and martingale level 3. But if you don't have, if you cannot use up to martingale level 3, where if your 10% cannot complete all the martingale levels, you have to make sure you stick to your 10%. The moment you lose 10% for that day, you stop trading. I hope the new guys can write it. I hope these new guys are getting this, like Mr. Victor A, Mr. DNA, and Mr. Eric Gian. I hope you guys are getting this. Every single person on this live session understands this. As long as they're on the market for us for the last 1 month, they understand this. So now, I used to say this also. Third thing is, survival is the first thing. Because no matter what, the moment you enter the market, it wants to take your life. That is the first instruction it has, or that is the first goal it has. It wants to take you. It wants to take your money. Now, how do? You survive first. You survive, you know your way around. Then you can try from there. How if they throw you inside forest now? How do you get out, or how do you become the king of the jungle? Two things. You have to make sure that you know how to survive. Because you can't just go to see lion and face lion and say, guy, Alpha, who you be? No. You have to know how to trick lion. You have to know how to catch lion. You have to know how to tame it. You have to know how to do all these things. You have to know what to eat so you don't starve. You have to know how to kill animals, hunt for animals, kill, roast without basic things that you have in the house. You have to learn how to survive first. Just like you are abandoned in a what they call it, on an island where it is just you. You will not start thinking about to build a mansion inside the house now, on the island first now. You have to think of how to eat, how to do all these basics, how to catch fish, how to kill animals, survive first. Then from there you cannot start thinking, okay, how do I make this my own? Even though we will never be abandoned in a jungle, we'll never be abandoned in an island. But for instance, an island, it is just you. Nobody takes you there. What's the name? Mr. Taylor usually shouts, forge your own path, forge your own path. Because yes, of course, you can forge your own path. Of course, I'm not against forging your own path. But then, forex is an island. When you want to take the trade, it is just you and your buy and sell. Nobody is there to support you. Hey, I've overtalked again. I've passed that 5 minutes. Anyways, your edge is not just your signal. Your edge is the edge is execution discipline. Now, before you take that trade, what are you doing? How much are you risking? This you have to make sure you are sticking to it. That is your edge. You keep doing the same thing over and over again. That is what gives you what's the name? That is what guarantees you success. So survival first before you then try. So that is one more slide and we are done. Now, the real edge. This talks about our psychology most of the time. Most traders lose because they don't follow their own rules. This one is either by mistake, either if you make mistakes or something, is because you're not sticking to your rules. So losses are part of the whole trading sphere. Yeah, losses, but the losses has to be controlled. So discipline over emotion is the ultimate differentiator of one big trader to another, to a small, what they call it, to another trader. You see experts, you see beginner. The difference is what? Discipline and emotion. You see expert, you see veteran. It is discipline and emotion. Somebody is trying to catch up with the other. Okay, I'm trying to control my discipline. I've seen a lot of people grow, and I'm really proud of a lot of people on this channel with the way they've grown in the last 1 month. Even I didn't grow like that in 1 month. When it took me years to get to all this level that I'm doing. It took me years. A lot of those years that I used to understand the forex. If I had known stuff like this, maybe I'd have been a faster journey. But then I suffered. So it took me years to understand this, but I really appreciate the fact that guys grew in 1 month, just following rules and they stuck to the rules, and that is what is giving them the results that they have now, even though it is still small. By the time they get access to bigger amounts or they grow their accounts to bigger amounts, there is nothing stopping them because they've done it over and over and over and over again, and they don't feel it anymore. That is how it is. So my conclusion: time zone provides you structure. Control means no revenge trading, no fear entries, and sticking to the plan. One of the things that I think AI has done to us too is the same thing I want time zone to always also do to you in a way is the idea that when AI gives you signal, a lot of us don't even bother to go and check what the chat is saying. Even and that is how we are supposed to be, because you should have to trust the fact that you're using the AI. Okay, AI gives me this, so I have got 1, 2, 3, 1, 2, 3. Lesser work for me. I don't have to think. I don't have to think about chat. I have to think about how to break down my own risk. Lesser work for me. That is what it means. So timing plus risk plus discipline equals to what? Longevity. So if you add time zone, you add your risk management, and you add your discipline, equals to what? Longevity in the market. So this is where I would end tonight's webinar. And I want you guys to ask your questions now. I'm taking questions till, let's say, 10:20. So floor is open. Who goes first?
Me.
Okay, class captain. Let's hear you.
Okay, so concerning checking for trending markets, on what
Yes.
time frame is it best to check for a trending market? Is it the 1 minute? Is it the 5 minutes? What time frame?
Okay, so let me use if you want to check a trending market, and you want to, because of the speed of because of the speed of the AI, right? If you had enough time, because of the speed of the AI, I would say you should go 5 minutes. Do you understand? Because of the speed of the AI, I would say you should go 5 minutes, because yeah, go ahead, sir. Let me hear you.
Some of us are used to the speed. I do check before taking
Very
trade. I do
fast.
check from 1, 2. So I just want to confirm from you.
Yes.
I don't have a problem with checking before taking.
Okay. So whenever I want to check, I go 5 minutes and 1 minute. It is easier that way. The moment I can confirm that I have 5 minutes, I'm trending 5 minutes on a buy, and 1 minute I'm trending 1 minute on a sell, on a buy, I'll be confident. But the moment I see that they are contradicting each other, it used to give me doubt. So instead, I don't check anymore. I just go. It used to give me that. So I don't like to trade on doubt. So moment I see what they call it, I see a pair, and I see that okay, it's that's why I said I always stick to rules. The moment I see a pair that is trending in one direction on 5 minutes, I just let's go for it. Even if it is not, even if it's trending in the wrong direction. Let's say, for example, now I see a buy from here rather than a sell, I will still take it. But if I was to check trends, I go 5 minutes to 1 minute, 1 minute to 5 minutes. They have to correspond, and if they correspond, I'm good. So, Mr. Emmanuel, did I answer your question?
Yes, thank you.
Yes, sir. So, who's going next? Who is going next? Who's going next?
For the sake of people that joined new, so can you tell us the perfect way to follow the martingale?
Okay, so the perfect way to follow the martingale. Mr. Originals, what a good question. Because I thought of it when I was talking to, but I wanted to save time. So the perfect way to follow the martingale is first of all, you need to break down your 10%. So let's look at what somebody should give me an example of an account that we can break it down with. I'm going to break it down with my own kind of account, and I'm going to break it down with a regular account. So I'm going to do that again now. What kind of
$100 and $10.
$100 and $10? Okay. Okay. So there are two. So there are two accounts here. $100 and what? $10. So we have $10, right? So $10. Okay. Let me mute Mr. Victor and unmute him again. So $100 and $10. So $10, we go with $10 first, right? So $10 for those of us who have a $10 account and you have a dollar account, not a naira account. You can. What is your 10%? What is the 10% of your $10? It is $1. So that means you can only risk on your entry this. Now you can only risk on your entry. Your entry is what is this, and that is the only one you can risk on. You can't go martingale 1, 2, and 3. Do you understand? If you are using a dollar account. Now, what is your own daily drawdown? Your own daily drawdown will be different from everybody because you have to take more risk than most people. So your daily drawdown has to be losing 3 trades on a row. So when you scan for signal, you lose this first entry 1, and you scan for another signal, you lose this first entry 2. Scan for another signal, you lose this first entry 3. You know that is all. Now the only time you can now stop, you can move from that level to another level where you can be using maybe this level and this level is when you get to $30. So you have to keep doing that idea where you take one. If you win it, fine. If you don't win it, you have 2 more to go. If you win it, fine. It has cancelled that 2 more to go. You will do it until you have achieved a particular number of trades you are going to trade for that day. So let's say you have to have a target. The first thing is, okay, I'm having a target of I'm going to increase this to 10:30. I'm going to have 30 more minutes on this live session. So you have an account of let's say $10, right? So you say, okay, you risk first $10, you risk first $1 on the trade, you lose, you risk again another $1, you lose again. Now on that third one is your last and final trade for the day. If you lose that one, so that means you're going to come back the next day. You don't have much money. So it's better you save it for the day when the market is good. When the market is good, you will always win. You can win 5 in a row. You've seen it on the live session. You can win 3 out of 5. Good. But you need to have a target. Maybe it is 5 per day, or maybe it is 10 per day. For those of us who are using a dollar account. Now, for those of us who are using a naira account, this is your own time. So now, for naira account, the minimum is what? I think $4.50 per trade. Not up to $1. $4.50 per trade. So that means that if you deposit like 15,200, because that's what it is currently, $10 is currently 15,200. That means you have about 1,520 as your 10%. So that's a very good deal. So yeah, you can risk $4.50 for a start. So that means if you have $4.50, you can risk $4.50 here, you can risk $900 here. 900 plus $4.50, that is what? 1,350. And you would have about 170, that is 170 left to hit your 10%. So you can go entry 1 and martingale level 1 for those of us who are using the naira account for $10. $10 equivalent of naira account, equivalent 15,200 equivalent $10. If you are using a naira account, you can do martingale level 1. Now, how do you now hit your daily drawdown for a naira account? You need to lose this and this on one entry, then that is all. But if you have not hit your 10% and you feel like I can still go and risk it one more time, then you can stop scan, generate another new signal, stop scan, generate another new signal. When you generate another new signal, you can now risk $4.50 on that one. If you win that one, that means you have won back, let's say 1,350, you have removed $4.50 back. That means you are 900 less. That means they are owing you 900. That's the meaning. So as long as you have not hit that 1,520, you may choose not to stop trading. Do you understand? You may choose not to stop trading. You may choose to continue trading. You may choose what to continue trading until you hit that 1,520. You may choose to continue trading. But the moment you don't hit it, you can keep trading until you hit your target for the day. Maybe it is 15 trades per day, maybe it is 20 trades per day, maybe it is 10 trades per day, or maybe it is percentage you want to do it. See, my colleague wanted to host a live session on the MJM AI community, but I'm sure he has slept. I'm sure he has slept. Anyways, but that is my point. That is my point. So you have to make sure that you are in range, you are calculating your 10% properly, making sure that you are sticking to that 10% rule. That is for $10 and Naira accounts. $10 in Naira. That is for those. That is for that. And I wish I had created a table for it, but I didn't have the time to do that much. But on my next webinar, I will make sure I add that to it. Or I will just create a random table and drop it on the channel. I'll make sure I do that. One of these days I'll do that. So now, for those who have $20, same idea. Follow it. Make sure that you are dollar or a Naira. Before you can say you want to be using martingale levels, you have to get to $30. Except you choose to risk more. But you need to have a rule behind you risking more. You have to make sure that you have a rule behind you risking more. I will never advise you to go beyond $10. Behind what they call beyond 10%. So that is for those who have $10 and in Naira. So now, for those who have $100, how do we do it? Simple. Calculate your 10% too. That is $10. And let's share the $10 into entries. Now, $1 here. Yeah. $2 here. You are wondering why you will start. You have $100 and you are starting with $1. Please don't start with $1. You would eventually feel it. You can win more because AI has a very good win rate. But the day you will lose, you also lose a lot. That is the reason why I'm always after you risking $10, risking 10% per time. So now you have $1 here, you have $2 here, you have $4 here. That is 4, 2, and what 1? That is what 8. So the remaining $2, you just have to let it go. If you don't win it on martingale level, what 2? So now since you are risking 10%, right? That means you still have $2 free. So that means that when you scan on the next signal, you can still take this first entry. If you don't win it, you have completed your what? Daily drawdown. Then you have to come back again tomorrow. That is for those with $100. I hope you guys follow. Now, for those of us who are now using Naira for $100, that is about 150,200. How do we now break down 10%? So 10% is what? 15,200. How do we break down now? If you say we start with 450, the maximum you will be risking is what? 450, 900, 1836. 36 plus 18 is 36 plus 18 is 5,400. 5,400 plus 900 is 6,000. 6,300. 6,300 plus 450 is 6,950. That is the total you will be risking per entry if you start with 450. So now, what if you increase it to like 1,000, right? 1,000. 2,000, 4,000, 6,000, 6,400. That is a total of 15,000. Like, okay, 8, 4, 2, 1. That's 15,000. You can do 1,000 naira per trade if you want. But I would not mind. I would prefer you leave room. So I can start with like maybe 700, 1, 4, 28. 28 plus 28 times 2 is 56. So that should be like 5628 14 and 700. That should be like please, I'm not a calculator. But anyway, that should be around 12,000 thereabouts. Do you understand? That should be around 12,000 thereabouts. So you can do that too. That alone will guarantee you success. There's no question about it. We've done it before. Like we've done it so many times on live session. You can see me do it every single day. It will always guarantee you success every single time. Because when you are losing, you're not losing too much. You're not losing something you cannot recover. If you lose 30% too much, you cannot recover it. You cannot recover it easily. I'm not saying you cannot recover. You cannot recover it easily. But if you lose what's the name? 50%, forget it. You're going to be frustrated. You're going to now, that patience you didn't have before, you will now have to now sit down and now have that patience to build it back. Now, but if you lose less than 10%, it takes you less than an hour to get it back. Less than an hour of trading. A good market, it takes you even lesser. We traded on live session for 40 minutes before, 40 minutes. The remaining one we use it to gist because we want 5 shares on a row. So imagine when you are trading yourself and there's no time for gisting, you just take, and you're doing 5 on a row. Come on. You would have recovered it back in less than an hour. So when the market is bad, lose small. When the market is making sense, win everything and enjoy yourself. So have I been able to break down the $100 and the $10? Is it clear?
Yes.
Okay. So who else has a question for me again before I go? 4 more questions. 4 more minutes. Yeah, go ahead.
You said something concerning the best time to trade.
Best time to trade. Yes. Aha. Thank you for reminding me. Best time to trade. I still came to a conclusion that there is no best time to trade. It is whenever you have the time, you should trade. Stick to your rules. If you have to trade 15 trades per day, 15 signals per day, make sure that you share the signals. You don't have to sit down one time to trade everything. I was telling somebody on this live session too that you don't have to trade all your signals at one particular time. Just trade it when you have the time. So you can share it 5 in the morning, 5 in the afternoon, 5 in the evening. You can share 10 in the morning, 5 in the afternoon. I know someone that says he prefers trading in the afternoon. We all know the person. So he prefers to trade in the afternoon. Nobody will stop you. As long as the AI is giving you signal, continue. Just continue. Sure.
But based on what you trade, which time you listen best?
Each time you think is best. It is whenever you have the time. Like I said, whenever you have the time. If you have the time in the evening, do it in the evening. But make sure that not all your trades are in the evening. Hold on. Give me a second. I'm already being called. So almost time for my next move, next what do you call it, next thing on the agenda. But I still have 2 or 3 more minutes extra for you guys. So there's no specific time. Like I trade from the hours of 4 to 8. I like that time. And when I see that the market is sweet, there was a day last week Saturday or last week Sunday, I traded from 9 to I think 9:30 there about to 2 in the afternoon or 12 or 1 in the afternoon, where I recovered for 2 straight days and I added extra on top. So that is I don't have a specific time. I just, when the market is sweet is when I like to come. But then I make sure that my rules is the one that gives me direction on what to do next. 10% and what they call it, 10% daily drawdown and signal. That is what gives me confidence and the time to come. I just come in, and whenever I am free to trade, I just jump into the market. I don't wait. I don't ask questions. I just jump into the market and I go. I keep trading. Mr. Emmanuel wants to ask me a question. He unmuted himself.
No, I just wanted to add to what you said. Mr. Victor, See,
Yes.
we joined in January. We have traded different hours of the day, morning, afternoon, night. The
Right.
reality is there. When the market is bad, even that your third martingale will fail you once the market is bad. So just like he said, stick to that your principle, the risk management, and just know once you hit your daily drawdown, leave the market, maybe for 12 hours or 24 hours. If the market was to be bad in the night or in the morning, it will be bad. So there's actually no best time to trade. Just stick to your principle and your discipline, and you are good to go.
Right. So Victor, am I clear? Any other, what they call it, any other question you guys have, please direct it to me tomorrow because we'll be also now, we'll continue, or we will resume. I've used too many words just to describe this live session. So we'll resume our live sessions tomorrow. Make sure you have them written down and join the live session tomorrow. Or you can ask them directly on the group after this live session, and I would answer them before I go to sleep today. After my next thing I'm doing, I would answer them before I go to sleep. So, any more questions, guys? Any more? All right. Thank you guys for joining in this live session. I really, really appreciate webinar number 2. I hope it was amazing. If it was, you guys can drop a like on the picture. Drop a like if you guys enjoyed it. If you guys enjoyed it, drop a reaction. And if there's anything you guys want us to talk about next, suggest the topics so I can talk about it. Suggest the topics after too. Okay, suggest the topic after if you guys want. If there's anything else you guys want us to talk about, you guys want us to cover, make sure you just drop suggestions. Let everyone support these suggestions, and from there I will think about how to go about that. And then the next one will be from next month. So there's no more webinars this month. Maybe I can do 2 per month at the end of the year, but I will see if I can do that. But like I promised, I will always be doing these things every single time so that you guys can always learn more while you are here. All these things are for free for you guys. Like I've promised from the beginning, I will never keep anything premium. I will never ever keep anything. I'll never ever make anything premium for you guys on this channel. Never. You guys are already here and you guys will keep enjoying it. So thank you guys for joining in, and I will see you on the next webinar. And we are going to resume live sessions tomorrow. So by this time tomorrow, you guys should be ready. We'll be trading again together. So let's see how it goes. So thank you guys, and I'll see you again.